First of all, happy Sunday, but most importantly, happy Mother's Day to all the mothers that are watching today's video. We really do appreciate you guys. And a lot of the reason for a lot of investors who jumped into AMC is to literally move their moms out of poverty or move their moms out of middle class. And I just want you guys to know as well that that is still indefinitely on the table. So whatever little presents you get your mom today, even if that's just showing her some love, there are still big things to come that you are going to do for your mothers. Also, what better way to start the video by telling you that today and today only, the Discord is 15% off only for Mother's Day. By the time I upload a video tomorrow, this deal is going to be revoked and taken away. The Discord link is right under the video in the description and in the comments down below, where of course you will get access to one-on-ones with me because I'm in there on the daily. Stock Talk alerts, which are options trading alerts by Barpot, the Stock Talk chat with 500 of the most amazing people in there so far, the DGen Bets channel, and we post gains and post losses. Without further ado, let's get right into the video. I want this to be a more chill video, kind of prep you for what's to come this week, what to focus on, and a few key things that happened with AMC throughout the week. So the Fed speakers this week are FOMC member Kashkari, Monday 9:15 a.m., FOMC member Barr, Tuesday 10 a.m., FOMC member Williams, Tuesday 12:15 p.m., FOMC member Logan, Thursday 10 a.m., FOMC member Bowman, Friday 9 a.m., and 2 hours later, Chair Powell will be speaking on Friday, which is going to affect the market. Other things that are going to affect the market, of course, are the earnings this week. Walmart, Home Depot, Target, TJX Companies, Ross Stores, Foot Locker, Farfetch, Canada Goose, Jack in the Box, Cisco, Applied Materials, Take-Two Interactive, Deere, Alibaba, Baidu, Sea Limited, so on and so forth. We do have an important earnings week this week. If you didn't see my video yesterday as to why the market is going to crash and how it's going to affect AMC, make sure to go watch that because it is an important video. We also touched about how that correlates to BlackRock purchasing HKD. BlackRock did buy something else today, maybe for a different reason. We're going to touch on that in 1 minute. But before we do so, all of this is going to drastically affect how the market is going to trade this week. I'm sure a lot of you guys aren't really worried because a lot of you just trade the market and swing it instead of actually dollar cost averaging, at least right now in the times of an attempt of a quote unquote Nike swoosh recovery. So we know that banks are fucked, but deposits at JP Morgan Chase, Bank of America, and Wells Fargo shrank by 465 billion year over year, more than twice the total of 4,000 small banks. So if you take 4,000 small banks, double the total and more, that is exactly how much deposits have been lost year over year at JP Morgan, Bank of America, and Wells Fargo, which is absolutely insane. 3 banks compared to 4,000, more than double the losses. Speaking of Bank of America, it's interesting the way Bank of America knows how AMC is going to trade, which lines up exactly with the point of interest that we've been talking about on AMC and GameStop. Pay attention. Latest disclosed ownership for AMC, for Bank of America, is 1.357 million shares at a latest disclosed value of a little bit under $7 million. And now if you take a look at the chart, when they recently loaded up, right, you're going to find that this was June of 2022, June of 2022, May 16th actually to be exact right here, May 2022, and you come over to May 16th, you're going to find they bought in right here. Oh, they just timed a perfect bottom with AMC, right? How would they know that they time a perfect bottom? They come back up. August 12th hits before APE is issued. You look at their disclosed ownership and boom, they are out of their position. They're out of that huge position that they took in AMC, making a disgusting profit on AMC. Now notice, they only do this when they know the time is right. For example, they accumulated late 2019 and they sold after the run-up in January. They accumulated and sold on the run-up in June, accumulated, sold on the recent run-up to about $30 before getting halted, and they are accumulating once again. It's as easy as that, as to buy calls a couple months out on AMC. Not financial advice, I'm not a financial advisor, but it's literally as easy as that, especially with all of the signs that I have been bringing to you for AMC. Now, BlackRock just purchased something as well, Mullen, ticker symbol MULN. There's a lot of stuff going on with Mullen, high cost to borrow, just had a reverse stock split, so on and so forth. Latest disclosed ownership is 73 million shares at a latest disclosed value of just under 10 million. And you can see that they have not let go of shares of Mullen. They have been accumulating, and now they are at a new record high of holdings for ticker symbol MULN. Now, is this to lend these shares out? You guys let me know in the comments down below. Are shorts stuck in Mullen? It's weird because if you take a look at the on-balance volume, people have actually been dumping off their Mullen, which makes me think that BlackRock is loading up for shorts to actually cover instead of lend out shares, and or this on-balance volume indicator is just way off, right? Because if the stock was being accumulated, it makes sense that BlackRock purchases a bunch of shares to lower the cost to borrow fee and kind of help shorts out a little bit, right? And get that interest payment to them. But if the on-balance volume is dumping and shorts aren't really trapped and they're they have a chance to get out at some point, BlackRock could be playing this the smart way and just taking advantage of those shorts that are in the play. You guys let me know what you think about this in the comments down below, and if you are in Mullen at all. Now, InvestorTurf posted this, and I like it. Citadel has been bailed out 3 times, once in 2008 with taxpayers' money, twice in 2022 with a $1.2 billion lifeline from Zakoa and Paradigm, and then a $600 million loan. The bankruptcy of this firm is inevitable, and its investors are being lied to, falsely claiming that they are doing great when in fact they are not. Their accounting books are completely fraudulent. When they perform the accounting for each subsidiary company, they fail to disclose all the information. Neither the parent company nor the affiliate company is accounting for losses because the accounting is designed to show that they are covering each other's books. That's fraud. Citadel investors need to withdraw their money and run. Let us remind you that in 2008, there were multiple reports of Citadel refusing to return investors' money when they were on the verge of bankruptcy. This may or may not be about to happen once again with Citadel and a lot of other firms, and I would not have my money in a hedge fund if it meant my life was on the line. If you do have your money in one of these hedge funds, remember when they are on the line of bankruptcy, they can just tell you no. You cannot withdraw your funds right now. We are in a troubled position. I don't care if you're in a troubled position, we are in a troubled position and we have to save our own ass first. To close out the video, here is a clip of Stan Druckenmiller stating that, in quotes, "I'm sitting here staring in the face of the biggest and probably the broadest asset bubble. Forget that I've ever seen, but that I've ever studied." Also, before I roll this clip, if you guys want up to 20 free stocks, each valued up to $2,000 per stock, use my link in the description, download Moomoo, and make a deposit. It can literally be a penny you find somewhere in your room, so make sure to go do that so you can get up to 20 free stocks, each valued up to $2 grand per stock. It takes 2 minutes to do so. Might as well do it on the weekend so you can get it over with. Overall, guys, that is it. Also, if you're from Australia, they're guaranteeing you 10 free AMC stocks plus 10 free stocks on top of that once you sign up using my link and making a deposit. That is it. I love you all. Lottery stocks out.
It's generally been followed. It was relative to the economic circumstances I had ever seen. And at that time, inflation was 2.5%. You had a booming economy. You were coming out post-COVID, and it was clear post-vaccine that we were on our way to maybe the most rapid recovery I had seen in my lifetime. I was not surprised about a year later that inflation reached 9%. I was not surprised that SPACs went crazy, Bitcoin went crazy, Dogecoin went crazy, equities went crazy. What I was surprised by was that for the next year, while all that happened, Jerome Powell's Fed continued to have their foot on the gas. They continued to buy $120 billion of bonds a month while rates were zero. This obviously led to everything I just described. Then, realizing they had probably made the biggest mistake in the history of the Fed, they slammed on the brakes. They've raised rates 500 basis points in the last year. We know historically 2 things which you've already articulated. Number one, the worst economic outcomes tend to follow too easily engineered asset bubbles. And number 2, big maxim in my business, don't fight the Fed. So I'm sitting here staring in the face at the biggest asset and probably the broadest asset bubble, forget that I've ever seen, that I've ever studied. It went on for 10 or 11 years. And then as the grand finale, the government spent $5 trillion on COVID. The Fed financed 60% of it.